You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Monday, May the 15th, and we've got a great show for you today. We're talking about Apple's Worldwide Developer Conference coming up. We've got a new Nintendo port mobile game that's coming out. We've got some Nintendo speculation on an upcoming game, and we're looking at a viewer stock that is a great example of what could be a home run pick for stocks. So that's what we've got coming up if you're watching live, so stick with us. If you're watching one of the recap videos, each of those articles is going to be uploaded today individually, so check the other ones out. Let's go ahead and let's dive right in. This is the type of stock that is a really good speculative stock. We're going to dive into it a little bit. It's a Canadian company. So let's take a look at it. GOOS. And I started diving into this one, and they've recently had an IPO on this. Not a ton of info on the stock, but there was enough there to look at and say this is the type of stock that you want to speculate in. Now, this apparel may not be your cup of tea. It's not my cup of tea, but there's enough things here to compare to other stocks in other industries for things that you may want to look at as a good speculative stock. So let's pull this up here. It's very small company. Like I said, they recently had their IPO. They've been around for a while, but they kind of needed some cash to pay down some debt. And that's what they did. They offered their IPO. So GOOS, it's $17, $18 a share almost. They're fairly pricey on their price to earnings. 70 times trailing, 50 times forward. Decent profit and operating margins. So yeah, they had $22 million in cash and $190 million in debt. So nothing, to knock it out of the park. Just looking at the quick statistics here. 70 times, $2 billion market cap. That's bigger than I thought it would be for the company with their sales. So not a tiny company by any means. The Canadian company. So let's go over. Let's pull up. I'll put the link to their investor relations in the video. So all the info will be there. You can pull up all the documents. And looking at the company, you can go through their history. And you can see, they started 60 years ago as a luxury brand. And they have quick slides for major steps that they have. And they designed some clothes for people over that went on Mount Everest. As the first Canadian to summit Mount Everest wearing a custom parka designed by Metro Sportswear. There are people that work for the company that have been around for years, designers and stuff, and it is really a niche apparel company for heavy duty outdoors. And no, there's no dividend on the company yet, and we're going to go over that in just a second. They actually outlined their plans for the dividend in their IPO. So they talk about their distribution that they have primarily in Toronto and New York, the stores that they have. So one of the things you want to look at is their initial report that they give out when it's the IPO, the prospectus. So these are very long, and again, the link will be in the description. Couple of things to look at. They have little snippets on the company. You see it's 170 pages. and they have their dividend policies in there. What you really want to look at is what they're talking about as far as their sales and growth, what they've got going for them, what they think their growth is going to be. And then you want to check out the risk factors is a big one. This is an interesting part of the report for anyone that does an IPO, is they basically list all the things that's wrong with their company. It's one of the strange things that you have to do when you're filing an IPO. And their dividend policy. So let's take a look. First part, they talk about their history and their competitive strengths. Okay, so that's them basically talking themselves up. Their growth. I wonder if I can zoom this in a little bit. Yeah, we can. So you want to focus on what some of their strategies are and how they see themselves growing and how they're going to grow. And they've had great growth year over year, great margins increase, 38% to 50%. I believe that was their gross margin. Yeah, gross margin expanded from 38 to 50, EBITDA 10 to 18. So they kind of give you their history of their growth. So they say, hey, this is what we've done in the past. This is what we know what we're doing. So it outlines their strategy that they have. Strengthen their brand, their wholesale networks, e-commerce rollout, et cetera, et cetera. And they show year over year how they've done. So you want to look at that strategy and go through that and say, hey, can they execute that? So, relatively small companies are millions of sales. Then you got to go down and you say, what is the risk factors here? Come on. Find this here. What are their risks? Here we go. And they throw out the standard, may not be able to maintain the strength of their band. They may not be able to grow as effectively as they stated in the past. And their expansion plans may be unsuccessful, raw material costs, things like that. They lay out all the things that can go wrong. Their status as a foreign, being in a foreign company, listed on the New York Stock Exchange. They put all of that in there. Not a lot of things out of the norm for risk factors. Basically, they said if our strategy doesn't work, that it could be bad news for the company. Which some companies, that's all the risk is to say, hey, if we don't execute, it's going to be bad. Others have more specific items. Some of them that operate multiple country, currency exchange rate changes and things like that. And they talk about their voting rights for shares and their dividend policy. And this you always want to look at, especially if you're a dividend investor like me. You're not expect to pay dividends in the foreseeable future. See the dividend policy. So they don't pay a dividend, which is a bummer. And small company, small growth company. But so you take a company that's been around for 60 years, so they kind of know what they're doing. They have a niche brand loyalty. If they grow this brand into the mainstream, you'd make a fortune off the stock. $17 a share, you could easily invest, $1,000 or a few $100 and see an absolute giant return in what you have. In the short term, they have the projected from the analyst, and they've only got a couple of them covering it right now, but Low is like $19. Mid-range is 22, and the high for the next 12 months, people are projecting around 27. So there's a lot of upside, at $17 a share over the next 12 months that analysts are predicting, and it's already trading at fairly high, 70 times earnings almost. So people think that this is a brand that's going to take off. It was issued, it's a cyclical stock. Obviously, they're going to sell more at certain times of the year. So the IPO was kind of issued at a weird time before the summer here. So I look at it as you want a stock that is sort of like this in an area that you can see the product, something that you're very familiar with. And this could be a very good long-term bet. I'm going to put it on and I'm going to track it under our viewer picks. I'd be interested to see where this goes 12 months from now. It is, if people are putting this on to get up Mount Everest, it's definitely good apparel. You get a couple of celebrities walking around with this stuff, it could take off like crazy. It's a small company like this. It could grow into something if it turns into a brand. Now, they've survived for 60 years in their little corner of the market. This is where I would like them to pay a dividend, so I think they'll be around 60 more years. Certainly, so in that time, if they're flat and they paid a dividend, at least you would be collecting some money off of them. But without paying a dividend, you just got to hope that they do take off. So that's where I would rather they see a dividend if I was going to invest in them. But this is definitely a prime example of a stock where, viewer discovered it, and small company that could just explode if a couple of things fall into place. And with the history of the company, relatively low risk bet, I would say. If you think this type of apparel is going to take off, and again, I don't know a lot about the apparel industry, but if you find a similar stock in industry, these are the type of ones to look at. And especially if you're an expert in that industry, you can make a ton of money. So let me know what you think. I think it's a great speculative type of pick from a viewer. Could have some big money, so we're going to track it. See how it does. That's it for today. Thank you very much for watching. You can watch us live every day, 12:30 Central, 1:30 Eastern. Shoot us an email. It's mail@InvestorXP, or tweet us at InvestorXP.com. The recap videos, give us a thumbs up and subscribe if you haven't already. Trying to grow the channel and get it out to more people, so the more subscribers, the better. Really appreciate it if you give us a sub. So we will see you tomorrow. Thanks everyone for watching.